You're losing money right now, not because you picked the wrong stock, but because you're listening to the wrong people. Wall Street wants you panicked, addicted, and trading every day. Warren Buffett? He's laughing all the way to a $140 billion net worth using one dead simple rule that 99% of investors completely ignore. Stick with me for the next few minutes, and I'll show you exactly what it is. Hey everyone, welcome back to ValueGenix, the place where we cut through the Wall Street circus and give you the same playbook that turned a kid from Omaha into the greatest investor who ever lived. Today we're exposing the single most powerful rule Buffett has followed for 70 years. A rule so simple, my 12-year-old niece understands it. Yet PhDs on TV still get it wrong every single day. Charlie Munger calls it the secret to practically no one in finance wants you to know. By the end of this video, you'll know exactly how to use it and why it quietly made Berkshire Hathaway shareholders 4,300,000% richer since 1965, while the average hedge fund manager barely beats inflation. Let's start with a story most people have never heard. 1950. A 20-year-old Warren Buffett is sitting in Benjamin Graham's class at Columbia. Graham writes 3 words on the blackboard that will change Warren's life forever. Margin of safety. That's it. 3 words. Number 400-page algorithm. Number 97 technical indicators. No CNBC hot takes. Just buy a dollar for 50 cents. Graham told the class, the stock market is a manic depressive fellow named Mr. Market. Some days he's euphoric and offers insane prices. Other days he's terrified and practically gives businesses away. Your job is to take advantage of him, not listen to him. Buffett says those 3 words, margin of safety, became the bedrock intellectual foundation for everything he's done since. Fast forward to 1988. Coca-Cola stock had just crashed 40% because of the new Coke disaster. Wall Street was screaming dead brand. Analysts were downgrading it left and right. The noise was deafening. What did Buffett do? He started buying, hand over fist, at prices that gave him a 6% plus dividend yield and a P/E ratio under 12. He paid roughly 50 to 60 cents for every dollar of Coke's true earning power. Margin of safety? Massive. Today, one single share of Coca-Cola that Buffett bought in 1988 is worth over $700 with dividends reinvested. A 15x return, while most investors who panicked sold at the bottom. That's the power of the rule. Let me give you another real example that happened right under everyone's nose. Apple, 2016 to 2018. The headlines were brutal. iPhone sales peaking. China trade war will kill Apple. Services revenue can't save them. Stock dropped almost 40% in 3 months at the end of 2018. P/E fell to 11. Buffett's Berkshire Hathaway quietly scooped up $1 billion worth of shares at an average price around $150 to $160, when Apple was spitting out so much cash it literally didn't know what to do with it. Margin of safety? Enormous. Apple was trading at less than 10 times free cash flow with $250 billion in net cash on the balance sheet. Result? Those shares are worth 3.5 times today, and that's before dividends and buybacks. While Wall Street was screaming sell, Buffett was buying a dollar for 70 cents. So what exactly is a margin of safety in 2025 language? Peter Lynch, another legend, explained it best. If you wouldn't buy the whole company with your own money, don't buy even one share. Here's the simple 4-step checklist Buffett still uses today, yes, at 95 years old. Can you explain in one sentence how this business makes money? If you need a PhD to understand it, pass. Does it have a wide moat? A durable competitive advantage that protects profits for decades? Brands, network effects, cost advantages, switching costs. Is the business run by honest, talented managers who treat shareholders like partners? Most important, can you buy it at a clear discount to its conservative intrinsic value? That's your margin of safety. If any answer is no, Buffett walks away. No matter how the story. Let's look at the opposite. What happens when you ignore the rule? 2021. Cathie Wood's ARK funds buy Tesla at $400 plus, pre-split, when it was trading at 200 times earnings. No margin of safety whatsoever. Story was incredible, story still is, but price mattered. Result? Funds still down 70% plus from peak, while Buffett's boring Coke and Apple positions kept compounding. Or take the 2023 regional bank panic. SVB and First Republic collapse. Stocks fall 90% in days. Wall Street screams, entire banking system is broken. Buffett quietly adds to his Bank of America position at 0.7 times book value. Massive margin of safety. Bank of America is already up 80% from those panic lows. Same rule, same result. Here's the part that should make you angry. Wall Street makes its money when you trade. Broker commissions, fund fees, options premiums, payment for order flow, they all go up when you're scared or greedy. The average holding period for a stock on the NYSE is now under 8 months. Buffett's favorite holding period? Forever. He still owns shares of American Express he bought in the 1960s. He still owns Coca-Cola from 1988. He still owns See's Candies from 1972, a chocolate company that has sent Berkshire over $2 billion in total profit on a $25 million purchase. That only works when you have a huge margin of safety and then do absolutely nothing. So how do you actually apply this in 2025? 3 practical steps you can start today. Step 1. Build your own too hard pile. 99% of companies go in there. That's okay. Buffett says he flips past thousands of ideas for everyone he buys. Step 2. Wait for the fat pitch. Only swing when the price is stupidly cheap compared to the business value. If nothing meets your criteria, hold cash. Cash is a call option with no expiration and no strike price. Step 3. Once you buy, turn off the noise. Delete CNBC app. Mute Jim Cramer. Stop checking price daily. Read the annual report instead. Pretend the stock market closes for 5 years. That's it. That's the entire secret. Final takeaway. The one lesson worth more than any MBA. The market is there to serve you, not instruct you. When everyone is terrified, be greedy. When everyone is euphoric, be fearful. But only when you have a massive margin of safety. If you remember nothing else from this video, remember Benjamin Graham's 3 words that made Warren Buffett turned into $140 billion. Buy a dollar for 50 cents. If you got value out of this, do me a quick favor, smash that like button. It really helps the channel. Hit subscribe and the bell so you never miss an upload. We drop a new deep dive like this every single week here at ValueGenix. Drop a comment below. What's one stock you think has a huge margin of safety right now? I read every single one. Thanks for watching, and I'll see you in the next one.